Earnings season heating up, and we're on the heels of a couple magnificent seven names. Alphabet and Tesla reporting second quarter earnings on Wednesday. But how does each name rank going into the second half? Joining me now is Brian Mulberry, Senior Client Portfolio Manager at Zacks Investment Management. Brian, it is great to see you, especially on set. So let's start here. When you power rank the Mag 7, my friend, how do you power rank? What are the variables, the metrics? What are you screening for?
This falls right in line with the conversation you've been having all afternoon. It's about the monetization of AI. That's certainly the next wave of where revenue growth is going to come from. And we look at it through a lens of two different metrics: short term in the next couple of quarters versus the next couple of years. Who is actually capitalizing on this AI monetization program? So that's what we're looking at and looking for. It leads to earnings growth, which we all want to see, but also earnings durability over that long period of time.
So perhaps let's get into some of these. Perhaps not surprising. Number one, Nvidia, Jensen Huang, powerhouse. Walk us through it.
When you just look at what the asset flow of AI is going to look like, it's going to start with hardware makers like Nvidia. They have the most functioning hardware that is in the most demand at this point in time, and that leads to the highest level of earnings growth and earnings durability. So you're talking about the next 2 to 3 years of earnings growth at 28% or plus. That certainly leads the pack for us.
Dan, I want to bring you in here. It wasn't so long ago. There were some questions about Nvidia. There were some skeptics. They were coming on my show, Dan. They were saying, you know what, 2025, maybe this is peak AI CapEx spend.
Yeah, I can't believe how many people were so wrong in so many different ways. The DeepSeek moment, didn't do the research, didn't realize how much Nvidia, billions of Nvidia was actually sitting behind it. It wasn't $7 million training these models. They thought the China risk was bigger when that export control went into place. But the demand in the global market, whether it's been Middle East, whether it's been here in the US, you hear Sam Altman and Elon Musk, they may not get along, but they will both acknowledge that their GPUs are melting because they literally can't get their hands on enough hardware. So the demand is so large, the margins are so high, and the diversification risk, meaning going to an AMD, is still too hard. You're seeing little bits. The inference era will pivot this just a little bit. But overall, they still control the market. They control the margins. And everyone that uses NVIDIA is at Jensen's door asking him for more. They're not selling. They're literally delivering.
Number two, we got the goal with Nvidia. Number two, who takes the silver? That would be Satya Nadella, Microsoft. How come, Brian?
We like Microsoft simply because they've built out the next level of sales. The Azure and the cloud business also showing that mid 20% earnings and revenue growth at this point in time. So that's the link between the hardware and the compute and what's actually going to look like in an enterprise software environment. Big cloud, market share there, and they've monetized that through Azure and done a really good job at connecting the actual computing power to consumers.
You share that bullishness on all things Microsoft?
I've been a Microsoft bull for a long time. I will say
it.
they're a little lower on my list right now.
Why? How come? Lower?
I want them to build their own infrastructure. You're seeing delays in their Maya chip. They're having some problems building that stack. I'm okay with their external workloads, the ones that customers in their Azure cloud are using being all NVIDIA. But for a lot of their own workloads, I'd like to see them have that vertical integration and have a little more control over their destiny. I'm also a little concerned about the research and lack of LLM development on their own, very connected to OpenAI. It was the best bet in the beginning. It absolutely accelerated, catapulted them to the top. But now you've seen Google catch up. Of course, Google's been at it a while, but Amazon has made big moves there. Tesla, of course, not direct competition, but making big moves in AI. Microsoft's doing better than Apple, but I would like to see more in terms of their own in-house AI development for their longevity. So you said a couple quarters. Microsoft is great.
Yeah.
Over a few years, I'd like to just see more in-house. I think Satya's got this. It's just, I'd like to hear more about it externally.
So Brian, Dan's throwing some yellow flags there.
The hedge on it is simply the early investment in OpenAI. They get to monetize that if anything goes sideways. So that would be, I would think, the parachute that Microsoft has that the other ones don't.
Number three, it would be Apple. Now, Apple, we know, has been under some pressure this year. Maybe there's some disappointment about its position in AI, the efforts there. What do you see?
It's really just the strength of their brand. The second they figure some of this out, they connect to almost 1 billion users with a vertical integrated stack of hardware that immediately gets impacted and upgraded. So their ability to simply execute on that level, I think, is really strong, and that's why we have it this high on the list.
What do you think, Dan?
I can't figure out how they can't execute, but they haven't been able to execute. They've missed on metaverse, they've missed on cars. Right now they're missing on AI. I say go buy Perplexity. It doesn't fix all your problems, but it shows some intent.
But that would be, Dan, a big shift in Cupertino. I mean, the biggest deal they've ever done was Beats for $3 billion. I think Perplexity is valued at something like $14 billion.
Oh yeah, it would be a big deal. But right now, the entire market is looking at Apple with the side eye, going, how are you getting this wrong? How are your top researchers leave? Nobody in a position like that would have left Apple 2 years ago. Right now, they're leaving to go work for Meta. Meta was the company that, why would anyone ever leave Apple for? They're the also-rans in hardware. They're the ads company. Apple needs to show some intent. Tim Cook needs to step up. Their COO leaving creates some risk, but their 2.2 plus billion installed handsets in the market gives them some time. I give them leeway. But you know, the Blockbusters and the Blackberries, all those companies thought they were impenetrable and undisruptible, and at some point it broke. I would hate to see that for Apple, not suggesting we're there, but they do need to do something.
I was talking, Brian, with another longtime Apple analyst, Gene Munster, and Munster's point to me was, it comes down to their install base for him. Yeah. Billions of fans all over the world. His point being they are loyal, they're locked in. The third-party research would indicate they're satisfied. His point was he believes that gives them a runway here. They've got time to figure it out. Do you agree?
Yeah, and that time for us is probably a couple of quarters to make the impact that Dan is talking about. That's why we're willing to have them here on our list. You have $130 billion in liquidity on the balance sheet. If they need to make a splash, they certainly can, or they might just be figuring something out internally that we just don't know about. On the fringe of all of this, you have quantum computing that might be a different solve for Apple, and given what they've been able to engineer in the past, you couldn't leave that off the table. But they have the money to finance it if they want to.
Is part of your call, Brian, on Apple, does it have anything to do with valuation? I mean, the concerns we're talking about, at this point, pretty well known. That stock has been under pressure this year, down, what, about 15%?
Yeah, I really do think it's a buy at this point in time, especially relative to some of the other places that you could find value in this market. This is still a very durable earning type of a stock that just happens to be under pressure in the moment.
What about Amazon?
We like Amazon as well. We've got this middle of the table at fourth out of the seventh. You know, everything we've been talking about. They've got size, they've got scale. You've got, you know, a pretty healthy U.S. consumer, so retail sales have been pretty good. Offset some of the pressure on tariffs with a little bit weaker dollar, and they've been able to do everything we've talked about in AI as well.
What about Amazon, Dan?
I think you hit it. I mean, I love the robotics, the deflationary aspects of all the AI in their business. Commerce has never been a revenue profit generator for them. They've been very dependent on the cloud business. The cloud business continues to grow. It does have law of large numbers. So when you see Oracle growing 50% and Google and Microsoft growing high 20s, they've been in the teens, but they're also 2-3 times bigger than some of those in terms of cloud. So I like the business. They do need to make a bigger AI pivot. They've made some big commitments, some new generative AI tools, some new agentic platforms. So I like what they're doing overall, and I think I would put them right in the middle too.
Within that cloud war, as Amazon goes head to head with the other hyperscalers, with the Googles, right, with the Microsofts, Larry Ellison's in the game, what would you say AWS's competitive advantages would be there?
It's the massive global deployment. They have the regions, the zones, they have the hardware infrastructure, the customers bought in, enterprises. So much technical debt. We've talked about this. Actually getting their data estate ready to use in AI is really, really hard. Picking all that stuff up and moving it is even harder. And that's why the enterprise AI deployment has moved so much slower than the consumer AI deployment. So we think that if they can be sticky and they can continue to upgrade and give customers what they need AI-wise in their cloud, I don't think customers are going to run. Now they need to have enough Nvidia. That's been a challenge for Amazon. And they need to make sure that their capabilities are there, because the AI era, it is a 100% inflection from that first generation cloud CPU era. So the ordering of who's the best cloud is getting restated in this AI paradigm. And so Amazon's been number one for the longest time. The risk is not being seen as the number one AI cloud.
Let's move on. Meta.
Yeah, so if we're in this AI conversation talking about Amazon and Microsoft really gearing up towards the enterprise market, Meta is going after the retail market in a really big way. Obviously, you've got Instagram, WhatsApp, and those users that are out there. So they're looking for the individual customers and monetizing AI in that way, opposite of what Amazon and Microsoft are doing. So there's a huge market there for them. You know, Zuck is certainly not afraid to spend money. He's doing it. He's investing in growth and development, but he's got kind of a hump he has to get over. He's got that metaverse that's still kind of lagging around on him that he spent a lot of money on and never really monetized it. So there's a little bit of a bug, and that's why he's lower on our list right now, is to see the execution.
And Zuck poaching AI talent, top talent from those rivals in Silicon Valley.
Yeah, I absolutely love Meta. I think they're the best in the group in terms of monetizing AI. So I put them up much higher because they're actually making money in their ads business using all this AI. The bets he's making, I'm a big soccer fan, Josh, so it's like the Premier League. You want to sign Ronaldo, you want to sign Messi, you bring the best talent. He basically sees a multi-trillion-dollar market cap opportunity in spending a few $1 billion to bring the talent, the OpenAI developers that help build, the researchers that help build some O3 and some top talent from Apple. They just brought the top talent in from there. He basically sees that as a better bet. I agree with you on the metaverse. I think they've missed. Metaverse wins when physical AI becomes a thing. There were years in advance, and sometimes they say, I wasn't wrong, I was early, and in this business, it's the same thing. Being early is wrong, they spent too many billions, but they will be first to get there when that metaverse moment comes.